very optimistic, ladies and gentlemen. Very optimistic, but I'm always optimistic. I'm optimistic that we are going to cover mergers and acquisitions, and then we are going to do calculating variance, standard deviation, expected return. And then I'm even optimistic that we are going to be able to go to what we didn't cover yesterday and do a bit of that so that we have covered so much ground so that when Saturday comes, we are somewhere. And also the other thing, if I forget, but the young man doesn't forget, but just in case the unthinkable happens, you should also tell me, because on Saturday, I am thinking of doing the leases and leasing and purchasing. You should tell me what else you want me to cover, if there's anything special. If we do leasing and purchasing, and if there's nothing else, we go and do international budgeting. Then we can tell stories on Saturday. That is if there's nothing else to cover.
I'm quite sure after tomorrow we'll probably get our results of our second project, and then we will definitely have some topics we would like to discuss on Saturday.
Okay, so we'll see what happens on Saturday. If anything, then we will look at what people are struggling with. Okay, cool. Let's get started. Okay, as usual, let's start. How are you feeling today? We always start that way. I don't argue with what other people have found to work. So let's start that. Let's put that in the chat. One thing as I get a little older, like 27 is a big number to work with. Rab, how can you be tired? Oh, okay, I understand. Because I'm 27, so I think everyone is energized. Full of Tony says weekend is around the corner. Yeah, I'm also looking forward to tomorrow. Friday is a good day. Lungelwa is also okay. The good thing, Lungelwa, today you didn't struggle with that link. That's a good thing.
That's because I have the link now. That is why.
I send it, but we are not going to argue about that. I send it.
We can argue about this one until, I don't know, Kingdom Come. I
On,
know I didn't get
on
that
Saturday.
link.
On Saturday,
Yeah,
there will be
yeah.
nothing else. Then we'll argue about that link.
Okay, that's a deal.
Okay. I'll just talk briefly about the theory, measures, and acquisitions. But there's something which I forgot, which I'm remembering now, which I forgot to put on the slide, but we'll meet it anyway. Okay. So what we are going to start with is to just find out, it's a simple calculation. So let's say Villa, where's the pointer? Let's look for the pointer. Villa Limited is 2,000 shares in issue and the current price is 4 rand per share. What is the company's total market capitalization? As you know, market capitalization is this 2 million times 4, which is 8 million. Simple. Why I'm starting there, so that when it's a concept which might just be funny and you wonder what should happen. Okay, yours is this one. Parker Limited is 7 million issued shares trading at 37 rand. What is Parker's market capitalization? Put in the chat quickly. I think everyone is here. Put in the chat. And I'm looking at this chart. It should be quick. If you have a calculator, I have my calculator on my desk, which my daughter bought me. What's the market capitalization? 259 million. Patrick says 259 million. Okay, everyone is saying 259 million. Okay, let's go. I think I have another question, similar question. 259 million. Then Harvey's Limited is 4 million shares in issue. The current price is currently 2,000 cents per share. What is the market capitalization? That one. Let's go for that one for Harvey. So that when we do that calculation, it will be easy. It's already in the bag. We already know what we are trying to look for. 8 million. Tony, I think it's 8 million. Okay, let's see if everyone is agreeing with you. Rab thinks it times 10, 80 million. Reshma thinks it's 80 million. 20 rand times 4 million. Yeah, Tony, you saw Mandy says it's 8 million. Okay, let's show the answer. 20 rand times 4 million is 80 million. 80 million. I think this one is okay. Any questions? I shouldn't always say I think it's a symbol. Let's go. Any questions? Okay, thumbs up, thumbs up, thumbs up, thumbs down. I'm looking. Thumbs up, thumbs up. Anisha, Anati. Okay, Lunge, why is okay? You are raising your hand instead of thumbs up. Okay. Okay. So then there's what they call takeover premium. Takeover premium is simply to say, what did the company pay over and above the market capitalization? Now that we know what market capitalization is, or the value of the company. So market premium is equals to price they paid minus price in the market, which is simply Aston Limited wants to acquire Villa for 9 million. Villa Limited is 2 million shares in issue, and its current market price is 4 rand per share. Calculate the premium. They want to buy it for 4 million. I don't know where I'm seeing the 4 million. Okay, for 9 million. 9 million was the offer, less 4 times 2. 4 times 2, which is 8. So the premium is 1 million. So the paid 1 million over and above the market price. So you see why we're doing the market capitalization. Now we are confident about our market capitalization. Now what's here? What is the takeover premium? Bobo came and we were already running. We were running away, Bobo. What is you? I don't know what you were doing. Answer in the chat, ladies and gentlemen. Okay, let's see. Let's see. Probably there's already there's no answer which I'm not seeing. Okay, let's switch on my secondary laptop. What is the premium? Takeover premium. Today, I'm optimistic that you are going to be moving very fast because there isn't too much theory. We are going to just jump into the question and it's just knowing formula and then minus. Optimistic. But you know, I'm always optimistic. Always. But not unreasonably optimistic, but just optimistic. Where is Olivia is not there. Okay. I wanted to call someone who's not even here. $41 million. Bobo, do you know what to do here? Because you just joined.
Yeah, I just joined. I'm trying to follow.
You're trying to follow. Okay. So you know how to find the market capitalization.
Yeah, no, I'm following.
Yeah, okay, cool.
Sure.
Okay, so the answer here, ladies and gentlemen, okay, is 41 million. So now there is something they call, when they are talking about mergers and acquisitions, there's something they call NPV. Cement is a clapping for yourself. Okay, it's a good thing. NPV is slightly different from the NPV which you calculated at some point. It's slightly different because this one is a more straightforward formula. NPV is equals to value created or synergy. Okay, now let's talk about synergy. Briefly, I don't want to go to town about it because it's not a full lecture, it's a revision, so we won't go to town about it. So when we talk about synergy, is to say when a business buys another business, they believe they are going to create, your managers, man. Why am I explaining what you already know? Okay, but let me just explain. They believe there's going to be value which they are going to add to that business. For instance, if you were to buy a business, you might think that you are going to have a stronger marketing arm, which is going to create value for the whole business. That's the synergy. So when we say NPV, we are saying that synergy minus X. So that theory, It's important in sometimes it comes with a theory. There's a theory question sometimes attached to it. So it's important to know what synergy is and what are the sources of synergy. It's like they will say tax credit is a source of synergy. To say you buy a company with a tax loss, which you can use to reduce your income, your taxable income. Part of that synergy. Okay. So we are saying synergy minus extra premium paid. So let's go to, okay, we spoke about, okay, now we are right where we are supposed to be. Where we are supposed to be. So we are going to this spreadsheet. So we are going to do, I'll do this part and you do this part. Since I am the only young one in this class, let me try to zoom to see if we can zoom it a little bit. Maybe, yeah, maybe. Our challenge is also we need more space this way. I saw they have these fancy screens, new screens this way. Okay, let's go. Aston Limited. So we are doing the green one. The director of Aston is appointed you as the manager and the blah, blah, blah. They are considering to take over Villa Limited, and you are to advise them whether or not to proceed with the project. The following is the market information. So this is the market information. You can see the earnings per share, market price, and number of shares. Additional information, cash payment is 9 million, synergy is 8 million. You are required to calculate the value of the proposed takeover. So the proposed takeover there is equals to the value of, okay, now I don't know, I want to say value of, I will just say Aston, then Villa, then synergy. That's the value. So Aston here, we know that that's share price. So share price 5 times 4 million. So we're going to say equals to 5 times. Some of you already know it's 20 million, but let's do it nicely. 20 million. Villa, you can see there what I'm doing there. 4 times 2 times that times 2 million, which is close to 4 times 2 million, it should be 8. 1, 2, 3. Synergy, where is the synergy? It's given here, it's 8 million. So we also write here 8 million. 2, 3, 1, 2, 3. So what is the value of the takeover? Value of the transaction is equals to that plus that plus that. So if you just need to know that. No, nothing too clever. You just need to know that. Okay. Any questions or you know what you are? So yours is no. You skip that one. Then let's do yours is this one. 4.2 is yours. There. Because 4.1 is a theory question. And when you find your answer, please post in the chat. That's why I'm optimistic today because you are doing simple things. So we are going to cover a lot of ground. Let's see. I'm just optimistic. So yours is this one. What's the name of this? Parker Limited. They say water is good for you. That's what they say. And I think they are right. Okay, where are we going to put our answer? Let me prepare myself for where to put the answer because we can't put it on there. We are going to put it somewhere here. 4.2. You know what? I will just say 4.2. I'm brave. Today I'm feeling brave. 4.2. Put it there. What is the value of the transaction? If you are unclear, ladies and gentlemen, you are just ask. I'm here. That's why I am here. And I'm not even since Lungel is here. I'm not even looking at my phone. There's no one to worry about. Okay. Reshma posted, Bobo posted. Mandy, are you still tired? When didn't you go and make some coffee a short while ago? Maybe it's a weak coffee. Maybe you made yourself free coffee and then it won't do anything.
Tokyo are destructive.
Okay, I'm quiet.
Very.
Yeah, I won't say anything. Okay, cool. Let's see. Let's see. So we are going to say Peter, and Parker, and synergy. It's gonna be so easy, ladies and gentlemen. This is gonna be so value is okay. But I don't care about the spelling there. Equals to Peter 8.5 million. Market price of the share is 45, so it's equals to 8.5 million 123 times 45. Parker is the 30 equals to 37 times 7. 123 123. Synergy, we are given synergy is 45 million 123 123 equals to value equals to I'm going to say sum here 686 500. Let's go to the next one 4.2. Now I'm in line number 15. NPV. What is NPV, ladies and gentlemen? If we go and look here, I think it says synergy minus something. NPV, yeah, synergy minus premium paid. Okay, let's go back. Synergy minus premium paid. So when I was looking at the questions, I said to myself, the order of the questions is messed up. The 4.2 is supposed to be, so let's do 4.3 first, and then we'll do 4.2. 4.3, what is the takeover premium? So the takeover premium is equals to the price they paid, cash payment, which is so I'll say cash payment because I'm trying to teach to be clear. 1, 2, 3, 1, 2, 3. And here, what is this? And minus takeover premium. Takeover premium is equals to premium. So what is the value? The value of Villa is 8 million there. This one. So the premium is equals to that minus that. So which means they paid 1 million more than the market price. So now when we go to NPV, so we can now say NPV. Remember, we looked at the formula there. If I'm going to make a mistake, someone has to be blamed for it. So NPV is equals to synergy, which is 8 million. 8 million, 2, 3, 1, 2, 3, minus this one. So NPV is 7 million. There. There. Ladies and gentlemen, yours is this one. It's also the same order. 4.2, 4.3. So when you find your premium, post it. Then you do the NPV, then you post. So 4.3, 4.4.
Sorry, Doc, how did you get the 9 million again?
9 million, I didn't even get it. I just took it from here. Line 11.
The cash payment, thank you.
Hmm. When you find the premium, ladies and gentlemen, post it so that I know we are making progress. When you find premium, please post it. Hmm. And then after the premium, remember, then you do the NPV. An interesting question. Interesting question. Okay, 1 more minute. I see lots of you have the premium, but no NPV. What's happening to the NPV?
Just
It's
click on that cell again, 15E there on that 7 million. Well, so what that was again?
15E.
So
This
that
one.
7, yeah, that 7 million comes from that 8 million minus G16. That is your, yeah, okay.
That's the NPV. It's a funny question though,
It
because
is, yeah.
in reality, in the real world, it rarely happens.
So that's that.
Lungelwa, where are you?
Over here, dog.
Oh, that's good. Are you almost doing NPV? Okay, let's do this thing together. Premium equals to what did they pay? Cash payment of 153 million. 153 million. 1, 2, 3. The issue here, ladies and gentlemen, Parker's value is there, which is minus 106. What is it saying? What's your thoughts? Let's see. Patrick, what do you think happened here? Because I want it to, so that it makes sense in your minds. Anyone with an idea, what do you think happened there?
They're probably in liquidation and probably buying a sale because it comes at a bargain. Maybe they were struggling or something like
It's
that.
a strange bargain. You're buying the company at less than its market value. Because now you are paying 153 million for a company whose value is, we know, yes, 259. Okay, so you are making a profit right on the purchase, which might mean there's something wrong with the company, but we are not there yet. We are not even worrying about that. NPV, we said, is what? Synergy. 45, 1, 2, 3, 1, 2, 3. Minus. Ladies and gentlemen, you remember minus. It becomes a plus. 151 million. What happened here? What happened here? We 26. We NPV, we said, okay, 151 million. Probably that's correct. Probably. Did I do it right? Did I do it right? Okay, we say the value of Parker is 259.
Yeah, minus the synergy.
So we are saying synergy minus also so yeah, this correct. Synergy is synergy is 45 million here. So if we say 45 million plus this, it should give you the 151. So it's minus which gives you the plus. Okay. Any questions before we go? Because we are going to the next thing. No question. That's good. Okay. Now we are going to 4.4. Ladies and gentlemen, 4.4. 4.4 says post takeover market price of the share. Okay. So the market price of the share, we need to first determine the value minus the purchase price. So the value we know is this one. But we know in the value, we are supposed to subtract the amount of money we paid to buy this company. That's the first step.
Sorry, Doc. Then
Yes.
if you go on the left hand there by E15 again.
E15.
On the 7 million, yeah.
Yeah.
So there we took the 8 million synergy. Okay, never mind. So we took the
Yeah,
synergy minus the. Okay,
Minus
perfect,
the- because,
thanks.
yeah,
All
it
right.
was
Yeah,
one.
that value and the synergy, that's both 8 million confused me. All right, thanks.
Okay. So yet market price, ladies and gentlemen, remember I said we need to find the value. So we are going to say equals to, first step, 36 million minus the money we paid for this, so which is minus 9 million. So this is the value of the business after the purchase, which is the synergy plus Villa plus Aston minus the money we paid out. But so the question is post takeover market price per share. But because we used the cash, the number of shares did not change. So we are going to say equals to this value divided by number of shares for Aston is still 4 million. So we say 4 million. 1, 2, 3, 1, 2, 3. So 6 rand 75 is the post takeover market price per share. Price per share. Post takeover price per share. Okay? Yours, you know yours. Calculation the acquisition premium we did that. Okay, so let's celebrate by putting some green there. There, yours is 4.5. If you are unclear, ladies and gentlemen, I'm here for that reason.
Doc, let's go over it again on the left hand side.
On the left hand side,
Yeah.
we say, okay, so let me put it. You see, I'm here now in the E50, E90, E50 something. So we're saying the total value after the purchase is equals to a value, which is this one, which is Aston's value, Villa's value plus synergy. So we say equals to this number. But we know that we paid some money. So we are going to say cash price. The cash which we paid. We know that we paid 9 million for this business. So we know that the value of this after including the premium which we pay, including the money we spent. So we are going to say net value of the whole business is equals to that minus that, which gives us 27 million. That's the value. But this 27 million, now we want to see, because the question here is what is the market price of the share? So now we want to see of the 27 million, what is each share costing? So it is going to be now 27 million divided by the number of shares, which is this 2 million. I missed something. Maybe 0. Something equals to divided by 2, 1, 2, 3, 1, 2, 3. Why am I saying 2? 4. Which will give you 6.75. Is it making sense here, Patrick?
Now it does, Doctor.
Okay, cool. So do your one, 4.5. So yours is the yellow one. Mandisa, are you just joining us? Okay, Anisha is 62.76. We are agreeing with Rahab. We are agreeing with Tony. Agreeing with Nelly. Reshma. Reshma.
I'm still busy, sir. Sorry, how did you get it to the decimal of 6.75?
It was just there. If it's not showing, then you just click this thing,
You
this comma
converted
there.
it. Okay.
So it's R6.75. That's the post acquisition price. My teams did some funny things. Okay, Lungelwa is Anisha there, Mendy there, Anati there. Okay, so now if we do it together, ladies and gentlemen, is equals to, so the value, because that's the most important number. Value is equals to this value minus the purchase price. This value minus how much did we pay? Cash payment of 153 million, 153, 123, 123, which gives you 533. So per share is equals to this one divided by how many shares were there? Because Peter is 8.5 million, 8512, 6276. Any questions, ladies and gentlemen? We are going. Then the even easier, we go to 4.5 my side. Post takeover increase or decrease in price. Okay. So what we need to do here, because we don't hear, no, not big things. We already know the price before the purchase was R5, because it's given here. It's given here in, I don't know why I'm blocking myself with the additional table. It is just making my life miserable. So the price, market price before the purchase was R5, and market price after the purchase there was 675. So simple. Post market, it's really, really, really equals to 6.75 minus R5. So the increase was to R1.75. As long as your answer here is correct, then the calculation is simple. We are just looking at that minus this new price minus that 175. So it was an increase in price. Do yours, so we can green this one out and go to 4.6. Your price is this one, 4.6. Okay, I was supposed. Increase or decrease. Okay, post in the chat. This should be very quick because it's just minusing two numbers. Okay, so increase Rap, there's increase Anatis, increase Bobo, increase Nelly, increase Lungi, Elwise, increase Mendy is no longer tired, increase. Anisha?
Doc, do we have to specify that specifically? Increase.
Yes,
Decrease.
yes, that will help because you don't know who is going to mark. And you're supposed to actually write the number, that minus that. So you are going to show the numbers. If we look at the silver lining of what happened when the first assignment was marked, is that we now know that we just need to be as clear as we can. Because we don't know who's going to mark the work. Market price for Pira is 45, so it's 776 increase. So we can green this one. Let's go to exchange ratio. Exchange ratio is a small exchange ratio. Exchange ratio. It's a small calculation. It's an easy calculation. Exchange ratio based on earnings per share. So we can see here they are earnings per share. Exchange ratio is simply. Oh, no. Why am I doing yours? I'm here. Yours, they are saying, what is the exchange ratio based on earnings per share? Exchange ratio is simply the earnings per share of the company which you are buying versus the company which is buying it. So in this case, it's equals to 3.11 divided by this one, 420. So the exchange ratio is 0.74. As simple as that. Then I click that one to two decimal places so that it's neat. So do your exchange ratio there. So this was 4.7. And when you're in the exam, ladies and gentlemen, don't get too excited like what I sometimes do. Then I end up just doing this market price because I'm not looking. I'm so confident. 20 says 0.82, Nelly says 0.86. I don't know why are you far from each other. 0.86. Tony, confidence. I think you are confident. That's me. Why is the answer now? No, why is the answer wrong now? 0.86. I'm just checking if Reshma is posted. No, Reshma is not posting. Okay, 0.86. Finally, you went to the right point. Okay, exchange ratio, ladies and gentlemen, I think it's 0.86. We are just going to say equals to 14.6 divided by 17, which is 0.8. It happens. Divided by 17. Okay? No rush in Africa, and we don't know why we rush, but that's what we do. Okay, assume that, okay, now it's slightly complicated, but not very complicated. Slightly, 4.7. Assume the takeover was based on earnings per share. Determine the total number of shares in this takeover. So to determine the total number of shares in the takeover, we are going to use this exchange ratio and say exchange ratio times the number of shares in the company we are buying. That's the exchange ratio. So we are saying we are going to give these people this number of shares based on, so we are saying 0.74 times, always remember the company we are buying. So times 2 million. So we are going to give these people 1.48 million shares of Aston. So that's where a little bit of complication. So we are going to say 0.74 times 2 million, which is the number of shares of the company we are acquiring. But then we are going to say, now that we know it's 1480, but we are going to give them shares for Aston. Okay, let's go for yours. So we did the exchange ratio. So those are the number of shares they are acquiring, they are giving to the shareholders. Okay, I won't tell you. I will tell you the theory when we are doing that, like, the thing there. Let's go. So it's this exchange ratio times the number of shares in the company which we are acquiring. But usually you are doing the right thing. You should round up. You should round up because you can't give a point something of a share. Oh, I know why some are saying 0.607 because they are saying point. So you are going straight to 0.74. Some of us, we did the lazy thing. So if we go here and say 0.74, it will give us a cleaner answer. Okay. So you say, so 4.8, let's say 4.8 new shares to be issued. Okay. So when they are, okay, now a little bit of theory. So the exchange ratio, now they are saying, if they are using the exchange ratio, they are saying, we are not going to pay for this business in cash. We are going to give them new shares in the acquiring company. So Sanlam is buying, because Sanlam is buying all these businesses. So let's say Sanlam is buying Naked Insurance. Instead of paying cash to acquire Naked, they say, okay, we are going to give you shares using the earnings per share exchange ratio. So we're saying we are going to give them 0.86 times this Parker, which is 7 million, times 7 million, 123, 123. You are going to see a clean number because I typed 0.86. I didn't do the Excel thing because it will give me a slightly different answer. Then we go to 4.9. Okay, mine, sorry, not yours. What is the post takeover earnings per share? If I had said this question myself, not a past example, and it was my question, I would have been clearer here to say, assuming that the takeover was done using the earnings per share. But since we are doing sequentially, we are assuming they are going to, so the number of new shares, let's first determine the number of shares. The number of shares after this is equals to this number, 1.8, plus the shares which were already there of this 4 million of the company which is buying. So plus 4 million, 1, 2, 3, 1, 2, 3. So these are the total number of shares. Okay. So if we want to see the total EPS, okay, so we are saying total EPS is easy, ladies and gentlemen. Total EPS, EPC, let me just say EPS so that everything is correct. So earnings per share, so we look here, earnings per share for Aston EPS, we are going to say equals to, maybe let's put it here, equals to Aston EPS, earnings per share is 420 times the number of shares, 4 million. Okay. Then the Villa earnings per share, EPS, is equals to this number of shares, 2 million times 3.11. So total EPS is equals to the sum of those two. Open bracket. And there, so this is the total EPS. If let's put a comma so that we are sure that we didn't make a mistake. Okay, yeah, okay. So this is the total EPS. So earning post-acquisition earnings per share is equals to, I don't know what's this whole story about. Okay, I'll delete it. I don't even know where it came from. So equals, sorry, I shouldn't delete it. I shouldn't delete it because it's the number of shares. I'm confusing myself. Equals to total EPS divided by the new number of shares, which gives you 420. 420 is the new EPS because the number of shares have increased. My one, I'm happy with my one. Any questions, ladies and gentlemen?
Just repeat that last part again, Doc.
Okay. So are you happy with this finding the total EPS?
Yes.
Okay. So now we are just this. You are happy with finding the total number of new shares?
Yes.
Okay. So we are just saying this total EPS divided by that. That's how simple it is. So this total EPS, which is the existing EPS divided by total number of shares, which gives us a EPS per new EPS, earnings per share. I'm happy with my what I've done here, but I don't know whether it's clear. But I can assure you I'm happy. So this was green.
Dr. Tiki, do you mind to go through it again?
Okay. So the first step is I'll do it, this one. Okay, let me just remove. Maybe some people are already using. So let me just highlight this as green and here as green so that we are together. Okay. So the first step is to find the number of shares. New number of shares. A number of shares. So remember we said the new shares in issue were 1480. Yeah, happy with that one.
Yeah, that's based on the new value of the share and how many shares. 100%.
Yeah, the new shares. So
Yes.
we are saying so the total number of shares is going to be the Aston shares, the acquiring company shares, plus the total number of new shares. So we are going to say equals to the 4 million, that my 4 million there, it doesn't work. 1, 2, 3, plus this one. So it gives us, these are the total new shares. So now we are going to say, what is the total EPS? Total EPS. So total EPS, we are going to say, because we have the EPS here. So I want to say this times that plus this times that. We are together there.
Yes.
Okay. So that's what I'm going to do here. I'm going to say equals to open bracket 4.2. I think the 4.2 is the EPS times 4 million plus open bracket 3.11 times 2 million.
So Doc, you still use the 2 million and not the new 1.4 million.
No, because we still use the 2 million because that's what those 2 million end.
Okay.
Okay. So now we have this total. Now we are just saying now EPS post EPS is equals to this 23 million total EPS divided by total number of new shares, 420. Is it a little bit clearer? It's clear as mud.
Kind of.
That's how clear it is.
Yeah, we'll tell you on Saturday. We'll go through it again tomorrow and tell you on Saturday.
Mandy, what do you want to ask?
No, it's gonna be more clearer when I'm doing my side.
Okay, do your side.
Yeah.
Do your side and tell me when you get stuck. Then we at least we know that this is where the sticking point.
Doc, please put your cursor on the new shares, new number of shares.
There. We are
Yes.
adding the 4 million plus this number.
Okay. Okay.
And the number above, Doctor?
This, remember, is the exchange ratio times the 2 million.
Okay.
So exchange ratio times the firm acquired gives us the number of shares we are going to give to the new company. The number of the acquiring firm we are going to, the number of shares of the acquiring firm we are going to give. So when you find your total shares, post it in the chart, and then total EPS, post it in the chart, and then we know what's happening. .9, I won't do it because theory you can go and read and write long stories when you want.
So would you advise us to round off that 86 cents on the right-hand side in the exam, or would they mark both of them correct?
No, you can round off that one. You should round off.
Okay. Otherwise, I mean, obviously the values will be out across
Will be
students.
will be slightly out. Yeah.
Yeah.
2 decimal places will be fine. Should be fine. Okay, let's say 4.9. 4.9 post EPS. Okay. Okay, let's do this let's do together. Then so that we can do something else. Let's do together so that we will be able to do an extra thing. Because it's only 4 marks. If you don't know how to do it, 4 marks, 4 marks out of 25, you can survive. If you want to get 21 out of 25, you say I'm doing
No,
too
Doc,
good.
we don't want to survive. We want to pass.
You want a distinction. It would be nice to get a distinction in this module. Okay, let's do this together so that we can do the standard deviation and the other things. I hope people will still have the firepower to do it. Okay, so remember the first thing we want to face total shares. Total shares is going to be easy. We are going to say that plus, how many shares were there? Plus 8.5 million. 8.5, 1, 2, 3. Okay? No runs. It should be a blocky number and no point something. We're going to just to be neat. So we're going to say, okay, so earnings, remember total earnings. Now we are doing total earnings per share because people need the clarity. Total EPS is equals to total Peter EPS plus total Parker EPS. Okay, that's what we're trying to do here. So we're going to say total Peter EPS is equals to, if you go here, EPS, where is EPS? Our EPS there, 17 times 8.5 million. That's what we're going to say. 17 times 8.5, 1, 2, 3. Parker equals to 1460 times 7 million. 14.6 times 7, 1, 2, 3, 1, 2, 3. So total EPS equals to sum that. So post EPS is equals to this total EPS divided by the total number of shares. 1699. So which is 17 rand, okay? 17. Ladies and gentlemen, this thing, you see me do it quickly like this. You think, yeah, it's always sitting in my head. It doesn't always sit in my head. You do it over and over and over and over again. After some time, you remember it. You remember. Any questions before we start something new, something else? Because we are still looking good. Any questions? Okay, then he give me the reaction. Up, thumbs up, thumbs up, thumbs up, thumbs up, thumbs down. Surprise, surprise. Anything? Is there, let's see on the react if there's a tired one. Okay. Man, to tell me, is there a tired one on the react? Now you are energized.
Ash, unfortunately, no.
No, okay. So yeah, so we are going to suffer. And that is okay. Ladies and gentlemen, let's do the standard deviation. Because if we don't do it, it means on Saturday we won't be able to cover much. Then okay, let's see if we can survive the standard deviation. But standard deviation is not too hard. Okay, ladies and gentlemen. Okay, so standard deviation. I want to go to town about the theory. It's late, and I won't go to town about the theory. I can see the Tony is doing nicely for himself. Okay, I want to
Just
go to
sharing
town
with
about, yeah,
just sharing with the team.
yeah, you can see you're working hard. Okay, so standard deviation, I will give you a bit of theory, not too much. Theory which I covered at length when we were doing the lecture. So the theory of standard deviation is to say we are trying to measure to say how far are the outcomes, different outcomes from the mean. So our mean here is 40. So if you see here, Ayanda's outcomes, if we look at the spread, they are much further from the mean compared to Ben, where the outcomes are closer to the mean. Therefore, we say standard deviation measures how outcomes deviate from the mean. So we can say what is the variability from the mean. Okay, I like to say that because what attracted me to finance and investments is this thing. Oh, my investments lecturer. Oh, it's variability from the mean. I said, oh, this man is the cleverest man in the entire world. So I can't forget that. So we say the higher the standard deviation, the higher the risk. Like here, if you see, I understand because the spread is wider. So this is a higher standard deviation, and if you higher standard deviation, it means we are so far from the mean from time to time. So the higher the risk. Okay, so what we are going to do here, we are going to work this one together, and I'm going to show you a video which goes through the same concept. Why I'm doing that, so that it's just reinforcing, and also to hear a different voice is always worthwhile. Okay, so to find the standard deviation, the first step we are supposed to do is this: to find the expected return. To find the expected return, we are going to say probability times expected return here. So we are going to do this: expected return 0.2 times 4 plus 0.5 times 5, which is that, plus 0.3 times 6, which is 5.1. Now that we have this 5.1, we can plug it into this formula and do this. 4 minus 5.1 squared, this is what we're doing there, times P, which is the probability there. Then we go to the next line, 5 minus 5.1, which is there, squared times P, which is that one, plus 6 minus 5.1 squared times P, which gives us 0.49. That 0.49, if they say calculate the variance, then you know that's the number they are asking for, which is the number which you get before you do the square root. The moment you put the square root on it, this number becomes the standard deviation. Okay, don't ask me questions yet. I'm going to remember, same material, different voice. If you just master that, then we know that you are home and dry. You don't need to be cleverer than that. Include sound, screen. Let's see if I am organized. I should have it here. Let's start from the start. If there's no sound, there will be a few. You can just tell me.
Welcome to today's mini lesson on standard deviation of a probability distribution. So now when we're given a probability distribution, first thing we always want to do, check and make sure that the distribution adds up to 100% probability overall. And then whenever we have a probability distribution, the first thing we want to do is find our expected value. So if we remember, the expected value is the sum of every x value times its probability. So we have 4 times 0.2 plus 5 times 0.5 plus 6 times 0.3. So we get an expected value of, and I've already run this one out on the calculator first, of 5.1. Okay, so that's always our first step in finding a standard deviation, is we need to find the mean value overall. Now, we're never given the standard deviation formula, but we are given the variance formula. It's the sum of every x value minus the mean of x squared times the probability of that individual value. So if we're looking at our distribution here, the distribution, and once again, we're finding variance first because we have to do that first step. X value of 4 minus our mean value of 5.1 squared times the first probability, and then we kind of continue on through the process. You don't have to write out every step, but we're always looking for the pattern of that value. So we work through, we can crank this out quick on the calculator, parenthesis 4 minus 5.1 quantity squared times the probability of 0.2 plus parenthesis 5 minus the average squared times its probability, and then plus 6 minus the average quantity squared times its probability. Okay, so when we work all that out, that gives us our variance value. So we get a variance of 0.49. And now to turn variance into standard deviation, what we have to remember is the sigma of x, or the standard deviation of x, is just the square root of the variance. So when we're looking at this, we have to remember that variance unit-wise is a squared value. So it's squared units, whatever you're dealing with. So we have to turn it back into a traditional unit by doing the square root of 0.49. So square root of that answer. Okay, and we get 0.7 for our standard deviation of the sampling distribution. And that is our short mini lesson for today. I hope this.
That's our short mini lesson. But this guy is really well spoken. Okay, let's see. Let's see if I can cut. Okay, let's see. I think we are going to the spreadsheet. Okay, that's why that we did that. Okay, now we're going to the spreadsheet. Yes, Mandy.
I just had the worst feeling ever.
What's worst
The
feeling?
marks have been released and I've got the lowest mark in history.
Okay, let's not look at that. No, let's not look at that. You don't no.
I
let's
just
not
needed to share that. I just needed to share that. I had to. I'm sorry.
Okay. Let's worry about it after when we finish this thing, when this question about probability, then we will look at it. Okay, ladies and gentlemen.
I think as long as it is positive.
You want to say
Not
this
at
about
all. Not at all,
Mandy,
Patrick.
no.
Not at all. Not at
Sure.
all. But it's fine. Let's carry on.
let's get on.
Now I got all of us curious.
Yeah. That's why I was saying you were supposed to wait. Until we finish, then we can worry about it. Okay, let's see. Okay. So we'll do together this one. Okay. We calculate the expected return. Expected return is equals to, ladies and gentlemen, we're just looking at what we're doing the short while ago, times 19%, close bracket, plus 0.05. This is from the exam, past exam, plus 0.7 times 12%, close bracket. Expected return is that. Expected return is, if we change it to a percent, that's what, 13.3. Okay. Now we can do your expected return here for number one. The same old way.
Maybe hover your mouse on that.
On the thing, okay.
17B. Yeah.
So do your number one there so that we can do this together. And post in the chat, please. If you have a question, ladies and gentlemen, I'm here. So that's why I'm here. Let's do this. Mantisa, did you check your answer there to see why it's so different from others? Okay, you are.
Yes, Prof. I had to redo my answer.
No,
Thank you.
nothing. Okay, cool. Bobo, what's happening? Okay, you got it. And let me see, Reshma. Okay, cool. So let's just do together. So for completeness, equals to 0.15 times 22%, close bracket, 0.5, 14% plus 0.35 times 4%, close bracket, 11.7. Okay, I won't even worry about it. So then the next number two is variance. Okay, variance. Now we are trying to do the variance. Remember, is this thing under the bracket. And since I have a young hand, ladies and gentlemen, I'm going to try to do it all at once. Okay. Okay, should I do that? Okay, let me not do that, otherwise. Okay, do that. Okay, let's meet first show of my young hand. Okay, so we are going to say 19. If we could type 19%, it would help. Minus expected return. What was the expected return? I'm going to cheat and just point at it. And I'm going to square it. I'm going to say times 0.25. And I'm going to close bracket plus open bracket 3 minus B17. B70, no, 3%. That's going to mess my end. That young end is going to really mess my things. Close bracket, squared, times 0.05, this one, plus, open brackets, 12% minus B17 squared times 0.7. I'll cry if the thing rejects. Why is it refusing there? Let me do it the long way. So what I'm going to do here, we're going to do was step by step so that I don't run into problems. So equals to this 19%, open brackets. Now we can just do it in a nice way. Minus expected return, 13.3% squared times probability, 0.25, equals to, open bracket, this 3% minus expected return squared times probability, that one, equals to, that young hand didn't help me much, minus expected return squared times, not minus, times probability 0.7. Yeah, I don't need to close the bracket. Okay, so now the variance therefore is equals to sum. We're adding everything now. And if we want, we can change it to percent, 0, such a small number. Ask me a question. So I was trying to do all this in one shot. That's why it failed, because somewhere you would miss a bracket. Question, ask me a question.
Is this section also out of 25?
What, this question?
Mm.
Normally it's less than, this one is a short question. It may be 10 marks. The short, it will be part of, this question where they combine the study units. If you don't have a question, then I'm assuming you're doing your one day.
So how many decimals would you go? Would you do 3 decimals or 4 decimals?
I would do 4 decimals. In another university where I teach, they actually have a recommended 4 decimals. But in this module, I have not seen the recommended one. So I would just do 4 decimals. Would be ideal. So like that.
Doc,
Yes.
kindly put the cursor on the first one. Thank you. The strong economy. Thank you.
So what's your variance there, Tony?
Oh, yeah, I need to work that out.
You need to then sum. Mandy, I'm running away from that place, from the from the place here because I want to use my Kesa to do something else. To
No,
prepare.
I'm sorted already. Thank you.
Okay. Okay. So now we're doing variance. We can actually number it for neatness. One. We even color it for neatness. Please post. No need to color. This one is few things. Can remove there. And so neat. Marks for neatness.
The variance is just those three combined, or what?
It's the sum of the three
Oh,
combined.
okay.
Because they remember it's sum that times P. Okay, yeah, Rahab and Tony different answers. Okay, Rahab looks like it's typing, maybe I start typing what standard deviation. We need to see another answer there so that we can start voting, which you start seeing which one is winning.
I'll patiently wait until we
Why are you patiently waiting, not doing your work?
patiently wait.
What are you struggling with there, Mandy?
I don't know. My Excel keeps giving me error messages. Once I press enter after the formula, so I don't know where it's going wrong. I'm still trying to figure it out.
I'm trying to think what could do. But are you using the? Is it the point? Do you use the? Okay, the point is fine, but this thing is fine. The to the power of.
I think that's where the problem is.
It's shift 6. I use
Okay.
shift 6.
Okay, perfect. Thank you.
Okay. Lungelo and Tony are agreeing. Let's see, Rab, I don't know whether they are going to. Okay. Okay. Rab is sticking to the 16-1. Nelly. Bobo.
I'm getting a total different number.
You can post it. You can be bold enough, post it. Maybe that's yours is the correct one. I think you are finding 500 or something. Then. Okay, let's see. Patrick, did you post? Okay, 5.9 is not too far. Patrick,
Doctor?
did you post your? Yeah, you don't want to post your one.
Right now, I'm not confident.
What if it's the correct one? Okay, let's do it together. Okay, ladies and gentlemen, remember what we are doing here equals to open bracket. So we are going to say return, which is this 22%, minus expected return, which is this one, 11.7%. Close bracket. To the power of shift 6, 2 times probability is this one, 15. Then go to the next line. Same, we are repeating 14% minus expected return, which is this one, to the power of 2 times the probability there, 0.5, equals to, open bracket, 4% minus this expected return, 11.7%, to the power of 2. So they might be, usually if the answer is wrong, you missed one thing, one small thing. Then we are going to sum everything because it's summation. Then we are going to close our brackets. And everyone is going to be so proud of themselves who got the 39 point there. 39.31.
Okay, I realized where I made the mistake. Thanks.
You realize. So standard deviation is now is SD is, remember, is square root equals to square root. So we are going to just say square root. So that's the easy one. In Excel, there's a square root there. If there's a square root thing. Or decimal place. There. So SD. Rab, why did you see? Okay, you went and redid your things. Mandy.
I'm getting there. I'm getting to the answer, but I'm okay now.
Yeah, okay. That's good. Reshma.
I'm getting there. I just need to go through the recording. Are you able to share that with us? Because I couldn't find yesterday's recording.
Yeah, okay, I can try to share with you. I tested with someone during the afternoon to say if you click it, does it play? But someone they didn't respond. I'll share the link. But is it okay? Are you stuck somewhere which you think it might be worthwhile to repeat?
Sorry, I didn't get that.
I'm saying, is there a specific place where you want some clarity?
No, I'll ask you on Saturday. I just need to go through everything myself, and then
You know what you can do for yourself instead of waiting for the recording. If you look on the last email I sent, you look for something which says standard deviation. There is one of them. It will be instead of listening to the whole 1 hour, 1.5 hours. There's a 5-minute video there.
Okay.
So that one I would have done it very quickly, and then you don't waste time. Oh, because 2 hours of listening to find just that, it will be too hard, too much. Okay, ladies and gentlemen, standard deviation. Why are we not posting standard deviation quickly? So standard deviation, ladies and gentlemen, is easy. SD. Okay, SD is equals to square root of that. So if you convert it to a percent, it's 6%. %6.27%. Any questions? Just for completeness, so this is when you are given a probability distribution. This is a little bit the more difficult one. The easy one, the next one which we are going to do, because you remember yesterday we said we are going to finish at 1:15. So we are not going to finish it. We are going to finish when we finish this one, which will be maybe 10 past. Which will be maybe. maybe 10 past. Okay, let's do the standard deviation. Anyone with a question here, because we are going to do we are continuing the standard deviation, but now there's no more probability distribution. Question? No? No? Okay, good. So standard deviation. We are continuing, but this time, if you look here, this exam question, there is no probability distribution. So we use a slightly different formula, which is this one. Summation x minus x bar squared divided by n minus 1. N minus 1 is to just say number of occurrences 1, 2, 2, 3, 4, 5 minus 1. So I just have an extra question here. I will do this one, and you will do this one. Yours, let's see, highlight it in yellow. And let's put okay, black, make that black. Okay. Calculate which of the two shares is the most volatile return. Remember when we said the standard deviation is measures the risk of volatility or variability from the expected outcomes. So I'm going to calculate this one with you. First step, we are going to find X bar or expected return. Expected return in this case is the average. So to find average, ladies and gentlemen, you know how to find average. If you have a good hand in Excel, you can just say average equals to average, but I won't do that. That's the temptation. I'll say that plus that plus that plus that plus that, close bracket, divided by how many? It's 1, 2, 3, 4, 5, divided by 5. That's your average, 18.9. Okay, do your average for this one, for total returns. Do your average quickly, ladies and gentlemen. Do your average here, so that there is not too much. Okay, let's see. Don't look at Tony's stuff. I'm looking at it myself. Okay, 11.7.
For the previous question, yeah.
Yeah, for the previous question, yeah. Square root of that. Yeah, it looks correct. And the more you play around with it in Excel, because then you don't need to type rubbish stuff, then you can...
That's exactly it. If you do it on Excel and you put some comments in, it makes it a lot easier in the exam.
And then you understand. And also, it depends your understanding. Say, so, okay, yeah, this goes there, this goes there, this goes there, okay. Okay, expected return, put in the chat, please. Put in the chat expected return for share total. So this one is expected return for Nandi.
Share total.
So your one is share total. Let's do
Sorry,
that.
Doc, where
Yes.
do we start? On year 2020?
No, we cannot do. Oh. Okay, let me do this. I'm being naughty. People are tired and I'm leaving that one open. You are doing this one, the yellow one.
Oh.
You want to kill me.
Oh, no.
Okay, please forgive me. I just said I didn't. It's past 7, so people are tired. I can't be forgetting stuff. We are almost finishing, ladies and gentlemen. Share total. We're just finding the average. But maybe round off to, when you are doing next time, round off to 2 maybe 4 decimal places, so that to improve the accuracy.
Okay.
Anati. Are you still there?
Yeah, Doc.
Just a few more minutes, you'll be free. Okay, cool. So now we are saying equals to expected return. You know what to do there. Ladies and gentlemen, I'm going to I'm going to cheat. I'm going to say plus, 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 plus. I'm going to say average. Okay. Now we are going to find a variance. Okay, variance, remember, it's this minus expected return divided by n minus 1. N minus 1 is you are counting the number of occurrence. N here, so n here is 1, 2, 3, 4, 5. So n minus 1 is equals to 4. So to make life easy for everyone, I'm going to do what I did before. Put the years here. So we are going to do line by line by line by line by line by line by line going down to make it easy. But if you have a good hand, you can always just do it quickly. Equals to minus 10 minus 18.9. Because remember, my one is 18.9. That's the expected return squared. Then we go to the next one. Equals to 18.5 minus 18.9 squared. Go to the next one. Equals to, open bracket, 38.67 minus 18.9. Hey, I'm such a good boy. I'm not trying to find any shortcut. That's really 2018. Yeah, well, I tried my best, guys. I tried. You saw how I tried there without without looking for shortcut. I tried very hard. It would help if I had an equal sign. Equals that minus expected return squared. So because remember it's a summation, so we are going to say sum. We're adding everything up. That's your variance. And SD, ladies and gentlemen, I want to wait that SD is equals to square root, that one. And to follow my own rules for decimal places. Any questions? Yours is this one. So you can do the easy one. You just copy there, then do one line by line by line by line. I was making a mistake all along. Did you see the mistake? I was making a mistake all along. I was forgetting to divide by 4. What's happening there? Okay, now it should be correct.
Doc, why are we going for 4 instead of 5?
N minus 1. The formula there. N minus 1. Okay, go for yours.
Just click on cell
Good.
B18. Okay, thanks.
Sorry, Doctor, I don't think I'm answered. I'm asking why we're using 4 years instead of 5 years.
1, 2, 3, 4, 5.
Yes.
Minus 1.
Oh, minus 1. Okay.
Because of the N minus
Okay.
1.
Oh, because of the formula. Sorry.
Because of the formula.
Okay, cool.
Rahab, you are happy with your standard deviation?
I think so.
We are going to test it. When we are done with all this, I'll show you the easiest, the quick. if you just want to test whether your answer is correct in Excel, I'll show you the quickest way to do it. But let's do step by step, because if you do the quickest way, you might not get the marks. So I did my variance and I did my SD. And I am so proud of myself. Post, ladies and gentlemen. Post. We are left with the 3 minutes to get to 1:15. Otherwise, people will collapse on me. Because there are some of us we still got it. 27, I still have any. We can still go up to 9. We still got it. Oh, you use the 90, 0.28. Okay. Or you use this one. Oh, because they are very close. The numbers are close. Let's see. Oh, very close. Very, very close. 18.9, 18.9. Because the question in the exam was calculate which of these is the most volatile. They wanted people to calculate the expected return, and they say, we don't know what's the story here. Okay, 1 more minute. Okay, ladies and gentlemen, okay, let's do this thing together. So we are just doing the same thing. Same thing. Also, once we finish this, you can relax, and then tomorrow when you look at it, I think probably it will be a little bit more easier. Not more easier, to be easier. Okay, so we are saying 2015 for this one. So Bobo says 362 is the variance, equals to, remember to times by -3 minus expected return squared divided by 4 n minus 1 equals to 21.29 minus that squared times, not times, but divided by 4 n minus 1 equals to 44 minus that raised to the power of 2 divided by, I don't know where I'm still stuck in the old one, equals to 2018 that minus expected return squared divided by 4 equals to open bracket, 28.3 minus that squared divided by 4 equals to sum, close bracket, 382 equals to square root of that, close bracket, 19.028. So then, therefore, we can say, if we move to 4 decimal places, we can confidently say, calculate which two shares is most volatile. We can say share total is most volatile, but by a teeny wins. Okay. Now to test, now let's test if our calculations are correct. In Excel, we can do the easiest thing. A standard deviation. Let's go here. We can just say equals to standard deviation to test for sample. Then we do that. We can celebrate and say we finished strong because the Excel agrees with us. And we can also test my one. Okay? To see if I was on the right track. I can also celebrate. I did very well. It's exactly the same number. Okay. Ladies and gentlemen, any questions? Any questions?
No, happy.
With this one, I'm okay. I'm comfortable.
You're comfortable with that. That's good.
Yes.